Our guest today on Zen and the Art of Real Estate Investing is my friend Seth Bradley, a real estate entrepreneur and expert at creating passive income while working as a highly paid professional. He's closed billions of dollars in real estate transactions as a real estate attorney, investor, and broker, managing partner of Law Capital Partners. He also is a former big law attorney and the managing partner of his own firm, Bradley Law Limited. And lastly, before I let him speak, he has his own podcast as well, which I love, called Passive Income Attorney Podcast, which I was on episode 51, An Introvert's Guide to Finding Zen and the Art of Real Estate Investing. I was just predating my title. Seth, welcome to the show, and thanks so much for coming on.
Hey, Jonathan, really appreciate you having me on today, man. Finally got this thing going, and I'm glad we were able to get this thing scheduled.
Yeah, well, I love being on your podcast. And I remember thinking while we were having that conversation, I was like, I think we should talk more often. And this is a great way to keep the conversation going from hours over to here. So again, I appreciate. So for the listeners, give us a little bit about your background. I know I went over the bio a little bit, but in terms of investing, how long you've been in it and what you do now in regard to that.
Sure, man. So I've been investing for about 10 years into real estate. Started in residential. My first property was a house hack into a duplex in 2013, and then just kind of worked my way up from there. Did wholesales and fix and flips and pretty much everything you can do in residential. And I still do a little bit of that on the side, mainly to kind of let my wife get her design skills to work, because she loves to use those from time to time. But I've since kind of moved on to commercial real estate. All over the place, though. I mean, we do retail shopping centers, we do industrial buildings, we do multifamily, RV parks. We do it all. My background is as a real estate and securities attorney, so I partner with a lot of operators that are kind of boots on the ground in these other places where I don't live, because I live in San Diego. Yeah. So I'll partner with them if they're in Kansas City, or if they're in Charlotte, or if they're in Louisville, or wherever they might be. Those folks are going to be the ones that are boots on the ground, and I'm the one kind of advising them on legal and capital raising.
Yeah. And are you also involved in those deals as LP or doing some part of it as well? Or is that just in an advisory capacity?
These are all just as me as a general partner. So I'm a manager on all of these properties. I also invest in all my deals as well. So technically, I guess I am a limited partner well, but I'm always a general partner on these deals. Yes.
Yeah, that's a good kickoff though. And I do want to get back to a couple things, because you've done so many different things. But in terms of the out-of-state investing, a lot of new investors are weary about how to do it. We try to give them the best advice. What's your best experience in terms of creating the boots on the ground that you trust, so you can feel comfortable not being in the area, staying in the beautiful weather of San Diego and investing in Kansas City? Like what's some advice that you could give to others who are looking to get better prices, because it's tough to buy in a lot of markets?
Yeah, absolutely. I mean, if you live in San Diego, or, on the West Coast, or even in the Northeast where it gets really expensive, it's hard to invest locally. When I was doing residential, it was all at a distance as well. I was still living in San Diego I was investing in properties in Cleveland and Charlotte and West Virginia, which is where I'm originally from. But I think the difference here, or the delineation I like to point out, at least for myself and my own experience, is when I'm trying to flip a property, a single family or a duplex, from 2,500 miles away, I'm typically price shopping with my contractors, with my property managers. And, you get what you pay for, right? So we always run into issues.
Couldn't agree more on that.
Exactly. I learned the hard way. I mean, you get all these different bids from general contractors, because you're going to need one because you're not there. And, they'll nickel and dime you to death. And then, if you give them too much money in advance, they'll take it, they'll run. And then we've got to get another contractor, and that, turns into delays. And it's just, it can turn into a real mess when you're living 2,500 miles away and you don't have eyes on the property at every single day or even every single week. But the difference here is I'm now investing in commercial real estate. So, we're investing in multi-million, if not tens of millions of dollar properties, where the contracting companies, the property managers, the third-party vendors, they all care about their reputation, because if it gets soiled, then they're screwed. So
they work much bigger projects. I mean, I think your point makes complete sense. When you're starting off and it's a one-off, of course, you're going to be looking at the numbers, but your ability to fail is so high because one person can throw you off. The larger scale it is, especially with commercial, like you said, those contracting companies are full-on businesses whereas your regular, one-off contractor is terrible at running business normally. But how did you make the connections? Because I know we've talked about it. I always talk about it with investors. How did you make the connections from state to state to really get started to know like, well, this is definitely a funnel? And then alternatively, how did you pick those markets? I think those are questions that people are always interested in.
Yeah, sure. I mean, a lot of it just comes from networking, right? So typically the folks that I'm partnering with that are boots on the ground, they're going to have a better idea of who's good, what contractors are good, who they've worked with in the past, and they've kind of whittled it down for me. So I don't necessarily have to worry about that too much unless we are going to vet like, new property manager or something like that. Then we'll go through an interview process. If we don't have, for instance, a property manager that we feel comfortable with or that we know going into these, a closing where we're going to need someone to manage a 100-unit apartment complex, and we'll do interviews. We'll interview 3 to 5 to 6, maybe even 7 property management companies and just see, how they are and just, see if we vibe with them and see if they have the systems and processes to be able to handle that sort of project. And as far as the contractors, the same thing. And if you don't know the contractors, then you've got to ask around. You got to ask for references and recommendations. And, I've kind of been in this game long enough that if it's a big contractor or a big property manager that's going to handle one of these larger buildings, I know someone that's worked with them in the past and I can get, some feedback from them.
Yeah.
Go ahead.
Yeah. Sorry. Go ahead.
Oh, I was just going to start talking about the markets that we got into, but
let me ask you one question. Yeah, before the markets, in terms of those, when you're figuring out that final move on the contractor, I agree with you. I think the personal recommendations are everything. Like online stuff is cool for restaurants, but I don't really want to trust, $100, $200, $300, $400,000 renovation on what I read on Yelp or Angie's List. I want to know somebody who said, no, I've used them and they did a good job and they were on time, right?
Yeah, agreed. For sure. So that's why it's so important to get out there and network and to just have a powerful, far-reaching network so that you can ask around and say, who have you worked with? Have you worked with these guys? That sort of thing, so you can get those personal recommendations.
Yeah, I couldn't agree more. Okay, well, hit us with how you grab those markets and what data you look at and what relationships you look at in order to decide like this is a good out-of-state market for me.
Yeah, I mean, they say in real estate you can make money in any market, right? And I think that's true. I mean, I used to invest in Cleveland, not the best market, but you can make money there because you can buy properties cheap, they cash flow, they're not going to appreciate, that sort of thing. Whereas you can also make money in San Diego. Yeah, it's really expensive, your margins are tight, but in all likelihood over time, it's going to appreciate like crazy.
Yeah.
So it really, any market works. But there are key things that you're going to look for, especially let's say with a multifamily property, we're really looking for population growth. And there's a lot of things that go into that. I mean, that's kind of the primary thing. And the things that kind of circle around the population growth, or why is the population growing? Probably because there's jobs. So there's great employees, there's employer diversity, there's industry diversity, those sorts of things. But it's all kind of related and moves around that population growth. Where are people moving to? So, those stronger markets like, let's say, Charlotte, Nashville, Phoenix, those places where people are moving because there are jobs there. But then you have to take it a bit further and say, well, okay, there's a lot of people moving to Dallas and Phoenix and Las Vegas, but is that population growth sustainable and are they getting overbuilt? So there's, you can keep taking it further and further, and you just got to do your due diligence. And there's only so much you can do from afar, to be honest with you. That's why you have to partner with people that are boots on the ground, that live in that market, that know that market like the back of their hand, so that they can get a better grasp on what's going on there. And also, start digging down into not only the neighborhood, but that exact street of where that property is located.
Yeah, that's great advice. I couldn't agree more, because I think like even from afar, you can see, especially the more units, the more potential problems are. If you're looking at like a 60-unit building, just say in some town in Texas that you're not familiar with, and the numbers all look good, like the cash flow looks solid. But if you turn around and you're going into an appreciation downturn because of the location or something's happening there that you might not be aware of, you could lose exponentially more the more units you have. And I think that's what happens in big economic downturns like 2008, when people were over leveraged in Texas and Florida. They just got destroyed because they had too much leverage and they didn't do the due diligence on what could happen if the market turns. In terms of you transitioning to commercial, I know why I like commercial, but what's the the biggest thing that makes it more attractive to be in commercial? Obviously, more units is always better because you have more scale to do more, which you could lose more as well. But what's more attractive now to you at this level of your game, comparing commercial to just kind of one-off residentials?
Yeah, I mean, we kind of touched on it itself. I like to work with professionals. So that's what started turning me off about these long distance flips and things like that, was just the lack of professionalism, the lack of pride in work, where you still see it, of course. You're going to see it in everything, but you see it much less in commercial because everyone, and even the vendors, the contractors, the property managers, they're running this like a business because it is. So we're just dealing with higher level businesses and higher level folks that are going to be able to take care of that asset for you, because you can't be there every single day. And then you had also touched on, scale. I mean, that's the thing, economies of scale, right? And, if you buy a single family property and rent that out and somebody moves, it's vacant, compared to if you buy a 100-unit property and 5 people move out, you don't really care because you're still have 95 more people that are paying rent.
Yeah, and don't you think, say you're doing some type of rehab on a major unit, maybe not all of them, but you're transitioning maybe like a quarter of the units. That's basically the same as running like one small flip. So why not do it on a larger scale? Because the management team that manages 25 renos at the same as your upkeep on doing stuff is the same. So I know we both agree, you just said it, doing just one rehab, it's fine if you know that there's scale in it for you, but doing small one-off rehabs to make 20 grand is just there's just no point when you've been in it so long. The time that you spend, you could spend the same time on bigger scale with partners and do much more, right?
Yeah, and to be honest with you, it's a little bit more boring, right? You have 100 units to turn over and you pick your finishes and all that, and you're done, right? And the contractor runs with it and they do it 100 times. It's simple, it's basic. There's economies of scale because you can order in bulk, your materials and things like that, but it's kind of boring. So I don't knock the single family. Yeah, I don't knock the single family flips because they are fun. I have a single family flip I'm doing here locally in Oceanside, which is just north of San Diego.
Oh yeah, nice.
Because it's local. I'm not going to do any more from a distance, but I'll do it locally because it's fun to me. You get to design and pick stuff out and work daily with people and make sure they stay on track.
Yeah, I get much more personal good feelings out of a one-off flip. They're frustrating, but I feel better when I do them than something that's more passive. The passive part obviously plays a role, but I think you've said you've been involved in all these different types of investments. In terms of diversification of real estate, do you feel that for someone, if they said, I want to build a diversified portfolio, what type of things are you going to recommend based on your experience? Because I always feel I think a lot of different asset classes are good no matter what you're investing in. It balances the rest of them out. Which ones would you focus on if you were just saying, starting a new portfolio, but you have some money to burn to make it work?
Yeah, I mean, I deal with this a lot, with busy professionals that, if they're doctors, lawyers, engineers, what have you, that have some extra income, but they're busy. They're working 40, 50, 60 hours a week or, even more. And I used to be in those shoes. I used to bill 1 million hours a year and have 50,000 bosses. And then I'm trying to flip houses from 2,000 miles away. And I ended up getting fired because of it, because you can't handle all that. You can't bill 3,000 hours a year and flip 10 houses from 2,500 miles away. You just can't do it effectively. So, I always say if you don't want to be in the business of real estate, but you'd rather just invest in real estate, I always recommend passive investing because you can get that diversification that you're talking about. You can invest in RV parks in Texas, or invest in an RV park in Texas, invest in a multifamily in Charlotte with different operators, different teams, and get diversified, across teams, locations, and asset classes.
Yeah, and that's where syndications come in helpful for people, which I think are much more passive type investments. What I say a lot is that most real estate that people think they want to invest in isn't as passive as they think, and that to make it passive, you have to pay for it. You, as the passive income attorney, do you agree with that?
100%. I mean, like I said, I've done it all. I mean, you have gurus out there that'll tell you, oh yeah, I'll get you involved in passive real estate investing. And they're even talking about doing fix and flips. There's nothing passive about
That's
that.
That's the least passive investment on earth.
That's right. Or even lately, the trend is short-term rentals. That's a big thing now. And they call that passive. It's not passive.
Gosh, not
sure,
at all.
Yeah, you can streamline your processes and you can involve technologies and sort of things like that. But at the end of the day, they are not passive. I mean, those are active investments. So it's ridiculous when they call them passive.
Yeah.
Syndications, REITs, things like that. And I hate REITs, but I'm just throwing out, those are kind of the passive things. Your syndications, your REITs, I mean, things like that. Those are the passive investments. But with REITs, you don't get those same benefits you get with investing directly through, let's say, a syndication. In a syndication, you actually own, you own the real estate. You own a portion of the real estate.
Yeah, you have a little bit more attachment to it. You have no control, but you at least know the asset that you're there. A REIT, for everyone who doesn't know, real estate investment trust, it's just like a collaborative bunch of assets, kind of like index funds. Is that how you would describe it best?
Yeah, and the problem with REITs are, they're subject to the public markets, right? Just like a stock. So, they're going to fluctuate with stocks, whereas real estate is not. Real estate is going to be market specific. It's not going to fluctuate with the public markets. The asset at the end of the day is going to be based on how much money that it makes.
Yeah, let's drop back for a second. How did you first get involved in real estate investing? That was about 10 years ago. What led you into it and how did you get started?
Yeah, I think I started like a lot of people listening to Bigger Pockets. I read Rich Dad Poor Dad, and you kind of get motivated from that. And then you're like, what's the next step? I want to get involved in real estate. And then you hear about Bigger Pockets, and you start listening to that podcast and reading the books, and you feel motivated. And I convinced my wife to house hack into a duplex instead of buying a single family house.
Nice.
And that was kind of my intro into it. And then I think she started seeing the benefits as well. When you have another renter paying most of the mortgage.
Yeah, I think that's a thing where a lot of investors go wrong is they're not involving their partners early enough in the process. I think to be a good house hacker, both people, if you're in a partnership, have to be on board or someone's going to be unhappy the whole time. And that means the investment's unhappy. So, regardless of the makeup, if you're in a partnership where you're going to be living there together, like house hacking is the one thing that it's definitely not for everybody. So having those discussions and then being like, how can we figure out if this is going to work can help the long term, investing as a family and making sure that this is part of our, this is part of our income growth for our kids, right? I mean, that's the goal.
Yeah, for sure. I mean, I've seen a lot of people that, a lot of husband and wife that, they just move into a house, they're paying a minimum down, 3.5%, 5% down or whatever for an owner occupied loan. And, you live in it for 2 years. And then you move on to the next one. You rent that one out, move on to the next one and the next one. And if you want to sell it, if you sell it within those first 5 years and you live in it for 2, you can get those no capital gains taxes on the sale. So there's, people that are generating a lot of wealth if they're willing to be kind of flexible. Even if you're willing to get started, let's say early in your 20s when you're a little bit more flexible, and move maybe 5 times in 10 years, you've just accumulated, 5 properties and you're well on your way to wealth.
Yeah, and I think it's funny how there's a lot of investing quote gurus out there who would never buy a condo or townhouse, but out where you are in San Diego and where I've owned plenty of properties around Encinitas, Carlsbad, you can buy condos all day, and in 2 years you're going to make $100,000 almost every time. So I find it funny that across the board, people just want you to do X, but condos, I feel are a great first investment for a lot of people because you have the safety of the HOA and not responsible for all the repairs. Have those been in your portfolio over time, especially where you are? Prices are high for condos, but condos in San Diego appreciate well.
Yeah, no, that's right. And going back to, gurus, I mean, that's just kind of how it's done, right? If you're the guru of syndications, you just talk about syndications and that's the only way to create wealth. Or if you're the guru of short-term rentals, that's the only way to create wealth. You just have to kind of stick to your lane or whatever. And that's the only way you get people to follow, or at least that's what they think. And that's the problem because there's a lot of different ways to make money in real estate.
Yeah, I think that people forget about that. They kind of lock in on a first strategy, and then if it doesn't work out, they're quitting, but not looking at all the options out there, like we talked about before, and just being diversified. But I think you have to be diversified in your ideas to start, because just because you want to flip doesn't mean a flip's your best first investment in your market. Maybe you are in an Airbnb market, so knocking out one of those and figuring out that process is just a better start, depending on where you are. I wonder if you agree with me on this because you've invested from afar for so long. If someone wants to do their first investment, would you recommend that it be nearby so they can see, feel, touch it just to get the experience?
Again, I think it depends on what kind of investment it is. If you're doing a fix and flip, probably. If it's your first investment and you're doing a fix and flip from long distance, it's going to be difficult without you being there pretty often. If it's a passive investment like a syndication, absolutely not. You invest in the best deal with the best sponsors that you can find. It doesn't really matter how far away it is from you because you don't need to be there. You're not operating the property.
Yeah, and you're just collecting the returns. You have no obligation to do anything else in those cases. Awesome. Let's sidestep into some of the questions that I sent you before. These are some great answers. And I think they're, as this podcast is about the mindful approach to real estate. And when we got on your podcast, I was like, oh, we're definitely going to connect on this. You have to get to a level of Zen to figure out like what things work. It's why a lot of us get out of the 9 to 5, and focus on our own businesses and our own careers and creating, our own firms like that. But so I asked you before, your greatest influence in real estate. It's your dad, but you said not because of the same reason as it was for my dad, who owned a lot of real estate. Why was your dad your biggest influence in your kind of real estate journey?
Yeah, I would say because, he didn't invest in real estate, other than our own family home. We own that. But it was more so because he showed me, man, this is exactly what you don't want to do. He got his degree. He worked as a teacher in grade school and high school and absolutely loved it, but made no money. I mean, back in the day, we're talking like, 40, 50 years ago, and even teachers now don't make that much money, but but he was making nothing. Like, so he had to quit teaching, which he loved doing, and go to the coal mines. I grew up in West Virginia, and you can make good money in the coal mines.
Yeah.
But, and he worked in the coal mines for, 20, 30 years. And it was just, really hard on his body. And he's still struggling with that now. I mean, he's in his 70s and, he struggles with his knees, his hips, his elbows, every single joint is just destroyed because of what he had to go through to just earn a buck. And I remember one particular moment when I might've been like 6 years old, maybe younger than that, when he took me down to the coal mines and we went down in one of those elevators that seemed like it was going down for, a half an hour. It seemed like that when I was a kid. And then, he's like, I'm going to show you where I work every day, son. And, you open up the doors and you're waiting for, you're a kid. You're like, okay, what are we going to see here? And there's absolutely nothing. The elevator doors open up and it's pitch black. You don't see anything. And he's like, turn your light on, because I had a hard hat on. Turn your light on, turn it on. You still can't see anything. It's cold.
That's it. Right.
And he's like, son, this is where I have to work every single day. And this is not what you want for yourself. That's why you got to go, get a degree, get a college degree, get an education, and go that route, because, that's how parents think, right? I don't necessarily believe you need a degree and you need all that anymore.
I agree.
But the advice at the time was, get your degree, get a good job, so you don't have to, do this blue collar work. And, that just stuck with me. And that's really why I went to college. And I mean, I don't know if I went to college anyway, but, I went to college and started going to med school, dropped out of that. And I was like, oh man, I got to do something else. I got to keep going. So I ended up getting my MBA, and then I went to law school, and then all this time I've been kind of interested in real estate and got involved in real estate and entrepreneurship. And I've since moved on from, the W-2, but that whole, conversation when I was 6 years old kind of got me started on that pathway.
Yeah. I mean, I obviously my dad was involved in real estate, but he was an attorney and I was an attorney, and I did the same. I just went to college and went to law school because he wanted me to. I thought that's what I was supposed to do. I do not think I agree with you completely. I don't think it's as relevant now as it was when we were younger, both at different times. But I'm glad that I did it. And there's a lot of people, I think probably for both of us, who we went to law school with, who are either not practicing law or using law in their current practice or whatever they do to benefit. Like, I use it in real estate negotiations all the time, because to me, it's much easier to negotiate in real estate, knowing my background. I was a prosecutor. It's just, I have leverage that way. Do you find that your legal education helps you in dealing with these real estate investments?
Oh, for sure. I mean, every single day. I mean, I don't think you necessarily need to go to college anymore to, if you're going to go into business or entrepreneurship or, real estate. But from my specific scenario, I use it every single day. I mean, that's how I partner with people. I'm like, I'm an attorney. I've worked in big law, I have experience in securities and real estate. Like I can be our in-house counsel and kind of go from there.
Yeah, that's awesome. Next up, most important trait for a real estate investor to have. You said perseverance. I know why I think that's correct, and I'm sure everyone would agree. But what's your reason behind it? Why is it so important? I mean, I am 100% on board with this one.
Yeah, I mean, I think it's pretty self-explanatory, but people maybe that aren't in entrepreneurship or real estate might not understand it like the folks that are in it. You're going to get knocked down. There's always things that are constantly changing. You have to just get comfortable with change and with being uncomfortable and with things just moving all the time. And you just got to roll with the punches. I mean, they basically say that, the more that you can roll with these changes and roll with the punches, the better of an entrepreneur you're going to be, because everything's just constantly changing.
Yeah, I mean, I think you have to be okay with failure and know that if you want to be in anything long-term, investing including, you're not going to win every time. Like nobody wins every time. You usually win big on a few, hit a few doubles, hit a few triples here, a lot of singles, and some strikeouts. I mean, yeah. You just have to try to minimize the strikeouts over time, right?
Yeah, for sure. And even finding properties, right? I mean, recently finding properties has been ridiculous. I mean, we're underwriting 100, 200 properties before we find one that works. I mean, it's pretty insane.
I think that's perseverance of just waiting out a market too. Like sometimes you're just not going to buy things. Like I just stopped buying because the deals were terrible. So just being able to wait out the market is definitely part of that as well. Here's it is. What is wrong with real estate investing world right now? This is a great one. You said too many beginners making big mistakes with OPM, other people's money. Before you explain that more, like you talked about bigger pockets, and I've obviously been on bigger pockets for years. And one of the things I find that it's a great place for beginners, but because it's an open forum, it can't be fully vetted as what everybody's saying is true. So there's a lot of people hustling for beginners on there, and that's where beginners can go wrong. So you're saying beginners are making mistakes with other people's money. I agree. Where are you seeing it the most, and why do you think it's happening?
Yeah, I mean, I'm in the syndication world, right? I'm raising capital. I'm partnering with people that are raising capital. I'm advising people while they're raising capital. The syndication game has just expanded exponentially in the last, 5 years or so. I mean, everybody that's doing it really has just started. So that's what I'm talking about when I say beginners. People don't even know what they're doing. I mean, they're raising capital from people and they don't even realize that they're under the scrutiny of securities laws. I mean, you'd be surprised by how many people I talk to and I bring that up. I said, well, what have you thought about this or that? And they're like, what do you mean? Like they have no idea that there are certain rules and regulations that they need to follow to be able to bring passive investors in. They just think that you can just do it. It's just a thing. But so there's a big educational gap there because I think there's so many people that are kind of flooding the market. I think that it's just kind of that next step for, if you're investing in 1 to 4 unit properties, you're like, oh, I want to go bigger. I want to go bigger because you hear about syndication, you hear about it on bigger pockets. And you're like, okay, well, I'm going to raise capital from people so I can buy this 25 unit or 50 unit or 200 unit. And they just start raising capital from all these people and just asking people for money. And, depending on your circle, they might even give it to you. But you have to stay within the rules and regulations and of the securities laws.
Yeah. And so I don't want to go down a huge rabbit hole with it, but to do the syndication, you need to do a securities filing and everything needs to be filed because you are collecting other people's money and there's different consequences for different people putting it in, right?
Yeah, that's right. I mean, anytime you can define a syndication or a security in different ways, but basically in layman's terms, if you have an investor that's not doing anything other than giving you capital and they're expecting a return on that money, you have a security and you have to pay attention to securities laws. And people just don't realize even the simple partnerships where you have, one partner that's doing all the work and one partner that's just giving money.
Yeah.
That's actually a security if this guy giving money is not participating actively or has some sort of managerial or voting rights. If this guy's doing everything and has all the power, that's a security.
That's interesting because That's one of the biggest thing is that one person's the money, the other's the work. You know, contractors do the work, you split the profit, and that could be determined as security. That's a good tip. You heard it here. Be careful and look out for that one. Here's the next one. One way we could all collectively make real estate investing world better. This one I'm really interested in your answer. You said implementing technology like blockchain and AI. Where do you see that going in terms of helping investors do better? Blockchain, I assume, is going to be partial to money transfers and things like that. But what about AI and blockchain together? How can they both help in your mind, especially with your background?
Yeah, I mean, there are so many different ways, but it's a slog right now, you know, pushing these technologies through. Real estate is a slow moving industry, right? You know, they don't want to adopt anything new. Everything it's the way we've done it for 100 years. So we're just going to keep doing it with title companies, escrow companies,
mortgage companies,
mortgage companies, transaction coordinators, even agents. Honestly, at some point in time, all these middlemen are going to be gone. You're not going to need it. I mean, that's kind of the big picture idea. It's going to be direct seller to buyer, and I'm talking about like a residential transaction. It's going to be direct seller to buyer because technology is going to replace all these middlemen that are taking their fees and taking their cuts and commissions and what have you. I don't know how long that's going to take, but at some point in time, it will happen. I mean, for instance, title companies, title insurance, right? At some point, all title is going to be on the blockchain. It's going to be recorded. It's going to be immutable. You're not going to be able to change it. There's not going to be any mistakes. So why would you need title insurance? You don't, because you can see exactly what there is. You can see it. That's just one example.
Yeah, no, that's great. I mean, I think for a lot of us in the business, we're worried about like if there'll be like shrinkage in the business for moving out. And I think your high producers or high value people will always maintain. And it's like our job to figure out how can we use technology to best help our clients without, you know, taking ourselves out. You know, it's never going to be able to give advice, but for things that are standard like record keeping, you're exactly right. Like if we can just find the records, what else do we need there? Good stuff. One thing that makes, let's go to the best book. This is great. I love to talk about this one because you had as your best book that influenced you in real estate as Miracle Morning. Same with me. That was the one that really, like Rich Dad Poor Dad's always a big one for everybody in terms of like getting the investing going. But I think in terms of like what this podcast is about, the mindful approach to real estate, like Miracle Morning was like a kick for me. It's by Hal Elrod. What was the major thing that turned it for you reading that first version of just regular Miracle Morning? What did it for you and how did it help you scale out what you eventually have still been doing now?
Yeah. So, you know, my first reaction was the Purple Bible, Rich Dad, Poor Dad, right? Everybody reads that, change their mindset. But then I kind of thought a little bit further and I said Miracle Morning because before I read that book, I was not a morning person at all. Like I would get up, you know, I don't know, 9, 10 o'clock, normal time, like normal people should and do. But I read that book and I'm like, man, I should be getting up at 4, 5, 6 o'clock, whatever. You got to get up earlier so you can kind of get through this Miracle Morning, quote unquote, this routine. And then you can start your day off on the right foot. And I started implementing those strategies and lo and behold, you get a lot more done if you get up earlier. It's pretty wild. When you have more hours in the day, you actually get more things done because at a certain time at night, typically things are going to start slowing down. I mean, if you're single, maybe you can kind of keep it going and keep working and stuff. But if you've got a wife or kids or things like that, after a certain time, you're just not going to be able to do anything else. So that morning is the time for you to capture the things that you want to accomplish that you don't have time for during the rest of the day.
Yeah, I mean, especially for those of us with kids, I mean, that morning you got to wake up and beat the kids by an hour. If you can beat your kids up by like an hour and you're up an hour before them, you're going to be like the most powerful hour of your day is before kids rise and have to get up, go to school or go to camp, everything. It's a huge benefit. For one point I did the 4:30 wake up. I was extremely productive, but I was like falling asleep at 7 every night. So I moved to like a sweet spot of between 5 and 6. And I kind of just wake up. What time do you wake up now? And are you still using the principles that you learned in Miracle Morning today?
Yeah, so I am to a certain extent. I've kind of, my mindset has changed a little bit. I mean, I used to kind of go through all the savers and hit all of them or hit, the majority of them.
Yeah.
And I think that people that are not used to doing them, that's perfect. Like you have to have that structure to get going because you're not used to getting up at 4 or 5 a.m. You have to do these things to kind of get in the right mindset so you can work. I've kind of changed over now where I just get up and I make coffee and I start working immediately because I don't even take the time to do it because I don't need it anymore. I don't need to go through those different things to, do a bunch of push-ups to wake up my mind. I just need my coffee and I'm going to start working right now. But I think you need that structure to get started. But I will say that you have to get your sleep. I mean, I think sleep is more important than just about anything else. So what time I go to sleep is what determines what time I wake up. I make sure that I get 7 hours. If I go to sleep at 2 a.m., I will sleep until 9. If I go to sleep at 9, I'll get up earlier.
My body resists. I wake up between like 5 and 6:30, no matter what. So if I go to bed at 3, I mean, maybe I'll sleep to like 7. That would be late. I'd like to sleep later, but I can't. It's tough. So let's talk about your podcast a little. How did you start the Passive Income Attorney podcast, and what has it meant to you? Because I mean, I was listening to it before I was a guest on it. I loved our show. I've listened to other show. I feel like it's definitely a unique perspective. But what got you started in the podcast game?
Yeah, I think it was just my background and where I came from, especially coming from a legal background like yourself, getting stuck in that billing so many hours a year and not being happy with what I'm doing and, just being told that I need to invest in my 401k until I'm 60 years old and then I can retire and ride off into the sunset. But I've learned through my own financial education that's not true. And going to, working in big law and seeing these partners that are in their 70s and still working and plugging away and billing hours and doing administration and doing all these things, you're like, man, when does it end? Like that's not what I want to do. If that's what success looks like, working in a big law firm, I don't want it. I mean, I don't care how much money they're making, but like, why the hell are they still there?
Is it going to be I did the opposite. I never worked big law. I worked government law, which was the same hours with 100 times less pay. So it was extremely not worth it, but you got the high of doing good for your county or state at the time. How many episodes have you done of yours? You're at 100 now, I think, or close, right?
Yeah, I'm up over 100. And to
Awesome.
be honest with you, I've kind of been slacking a little bit, running a few replays. I've just had so many deals.
One of the replays was mine, so I'm all for it. Yeah.
Yeah. So, I mean, people usually just listen to the most recent ones anyway. So all good. There's plenty of content out there. People get caught up.
Yeah. Awesome. Yeah. We'll link to that for sure, as well as your website. And before we hop off, I like to ask everybody this question towards the end. If you could give a brand new real estate investor who's going into the market right now, if you could give them one piece of advice based on your experience, what would you tell a new investor who's just looking to get in now?
Yeah, I always say find a mentor, find somebody that's going to show you the ropes. I mean, whether that's, somebody or somebody you meet at a real estate meetup, or even if you have to pay for coaching, whatever it takes, I mean, do it. Just don't go through the mistakes by yourself because you're still going to make mistakes, but you can avoid a lot of them by having somebody that's going to mentor you or coach you through your first real estate investment, whatever it is. If it's a single family house or it's a 100-unit apartment complex, get a coach or a mentor.
What do you think the best way to find a mentor is? And I'll weigh in on that as well. Because it's not as easy as people think. I think too many people just put up their hands and say, hey, I would like a mentor, but why would we mentor you if there's nothing in it for us? So what do you think the best way to find a mentor is for someone who wants to get into investing and who wants to learn a lot and really get it going?
Yeah. I mean, I think there's a couple pieces of that, just networking, going to real estate meetups that are local to you to try to kind of get in those circles and just kind of meet people and shake hands. That's kind of the first step. You can start reaching out to people that you see online. I mean, if they have a podcast like us, you can reach out to us and schedule a call or send an email or something like that. Not necessarily we're going to coach you for free, but you at least start the conversation and get that circle kind of around you, and then it will grow. It's kind of going to grow on its own. And then once you get to the next step, if you're not going to pay for coaching of some sort and you're looking for a mentor, you need to figure out where you can bring value to that person. I mean, what are you good at? I mean, what do you do for your W-2 if you're still working your job? Are you an engineer? Are you good with numbers? Can you help with underwriting? Things like that. Are you boots on the ground to a market where somebody else is looking to invest in? Things like that. Just see where you can add value to them, and maybe they'll help you out.
Yeah, I agree completely. That last answer is perfect. And I think that I'm all for paid coaching. Most advice that I give people is don't invest in paid coaching systems before you know who to trust, because you're going to sink a bunch of money into a system that any of us could tell you about for free. But I do think that it's valid later. I'll see if you agree as we wrap this up. To me, like, the best time to pay for coaching is when you have an existing business and you want to take that business to the next level, because that's where a coach can really increase. It's the same as what you said. If you want a mentor and you come to the table with nothing, why would somebody help you? Figure out what skills you have that could assist somebody else, and have here's my bag of tricks. This is what I can offer. Would that be of value to? And if not, figure out where you can do it. Do you agree on the paid coaching aspect?
I think that makes a lot of sense. I think if you are still a newbie and you haven't started your business and you're looking for a coach, I think you need to be really careful, for sure. You definitely need to do your rounds and do your research, and because there's just so many people out there that are coaching and selling stuff that haven't done anything, right? Or even if they have, or is very minor, and they're not doing it anymore. You just need to make sure that the coach or the course that you're buying is given by somebody that is actually doing what you want to do. Make sure they're actually an expert in the field and they're not just really good at talking.
Yeah. Awesome. Well, I really appreciate you being here. Where is the best place for everybody to get in touch with you? I know we're going to link to everything, but you and I always communicate in DMs on Instagram. Where do you prefer if somebody wants to reach out to you and contact you? Where's the best spot? Email, phone, Instagram? What's best for you?
Sure. I have all of my links. They're just on SethPaulBradley.com. There will be links to the podcast, links to my social media, links to, any new deals that I have going. All that stuff is updated and current.
Awesome. Fantastic, my friend. Great to have you. And thanks for coming on my podcast. I'm glad we could do it both ways, and I'll be available for you whenever you want to bring me back. But appreciate you having on. And eventually I'm going to be back out to San Diego since my sister's in Carlsbad, and I look forward to meeting you in person in the future soon. Absolutely, brother. Thanks for having me on. Yeah, appreciate it. That was Seth Bradley. His podcast is the Passive Income Attorney Podcast, and we appreciate you listening today. I'm going to keep him on while I do the most uncomfortable part of the podcast, because he knows about it. If you're listening to us and you're like, wow, these guys know a lot, I like real estate podcasts, you should go and subscribe to both of our podcasts. They'll just show up in your feed and you can listen all the time, but only do it if you like them. We don't need to troll for extra likes that aren't there. And if you like the podcast, write a 5-star review. No reason to write anything other than a 5-star review. Just pass if you're not a big fan. But that's how us who are podcasters, it helps us, grow up on the Apple ranks. You agree with everything I'm saying, right? 100%. Yeah. All right. We'll let it go with that. Seth, thanks so much. We'll see everybody soon.